Hi, welcome to the Market Alert for Friday, the 4th of January 2018. So yesterday in the pound, after the flash crash that we saw here, we've got the two red bars there. These are professional selling bars. These show you when the pros are selling. And you can see the market coming off the low there as well, closing just within the, or just under halfway on this particular bar, which is indicative of the market finding some buying. Otherwise it wouldn't have closed off the low. This is then followed by the buying, which we see here in the green bar, and then there's a bit more selling and profit taking after running the market back up 100 pips here, which you'd expect. There's also a bit of indecision in this area here as well with this bar. You can see there the market down and then back up, and eventually the market makes its way all the way back and trades sideways in the overnight market. And then during yesterday's session we have a bit of a battle going on to begin with. We've got some testing here in the blue bar, which you get after selling. The market then drives higher. It's the 50 bar moving average, and then we see some profit taking. We've got it here in this red bar. And then we've got some testing again here. The only reason this bar isn't blue is because the open and close aren't in the top third. And then we've got a bit more indecision. There's still a battle going on. We get the buy signal, and the market then drives through as people change, or traders change their minds and move the market higher. And then we run straight into the indecision here in this telegraph pole. We know there's indecision because the market's open, drop down and come back. So there's some profit taking again in this area, and then the market moves lower. And where it moves lower to, I say it's all predictable. It's all easy to spot. I'll just take the check mark out of there so you can see what it is I'm actually drawing. So from this low to this high, you'll see the market trade back to 62-76%, and also the psychological level as well of 125.50. Eventually the market drives through. You see new buying coming into the market with the green bars, and then it makes its way all the way up to the 200 bar moving average, which it struggles with for a while, and then eventually it breaks through with new professional buying. It does here as well, but it's immediately followed by a red telegraph pole there, which is some indecision and profit taking coming into the market. And if you want to see these bars, they're here, so you can see the types of price action that we've got. We have a section that takes care of the buying, and then there's buying pressure and a down move. These are potential strength bars. We've got selling bars, and then we've got potential weakness. And if you understand how all of these works, you can read the market on a bar by bar basis, just as I've taken you through there. And where we're currently trading is the market is above both the daily pivot and also the 200 bar moving average. It's in a bit of a sideways range at the moment. It's been a bit of selling and buying and churning on the overnight there. The market's gone up, it's come back down. Also seen it test there, but the range is negligible at the moment. It needs the European traders to come in and kick this market off and see where the market goes. So yesterday you can see the flash crash in the daily chart. Daily chart, very important chart. Steps back, allows you to step back, look at the bigger picture. We can see there's some buying in this market, not as much as I thought there would have been, and prices attempting to move higher. However, it's got the 20 bar and 50 bar moving average in its way. It will also have this in its way as well. If I can just draw this in from this recent high to this recent low, it's going to hit the 127.21, which is also going to be a resistance level for this market should prices continue to move higher above the 20 bar moving average there. News today, these are the ones. Unemployment rate from the US, non-farm Figures today, this will be interesting. See how this one's rigged. And Powell, well, that'll be interesting as well. He's out at 315, so that could have an impact on the stock market as well, given the turbulence that we're seeing at the moment globally. And speaking of the stock markets, let's have a look at yesterday's Dow. The market, let's just go back to Wednesday. We had the indecision. There's a bit of an increase in volume there. Yesterday also, it doesn't show as a selling bar, but we're certainly selling around yesterday. And we're seeing the market come off the lows at the moment. And the 76% retracement is the one that I put in yesterday, which was drawn from this low to this high. And you can see the market trading down towards this area. Inside of yesterday's activity, well, we kicked off with, let's just go back a bit. You can see the market there just managing to get above the 200 bar moving average. Started to get a bit tasty and interesting here. We got buying followed by selling, and then there's some indecision. They tried to move the market higher in the first 5 minutes, and then it was slammed with selling. They tried to bring it back with buying pressure, and buying pressure is a price bar where the range of the bar, this green bar, is narrower than the range of the previous bar, but the volume is greater. So that means there has to be some pressure around. Now what this turns out to be, and again it could be two things. You've got trying to buy into the market to bring prices back, and then we see prices coming back in the next bar. And this can be a classic case of short covering. Those that are short are getting out, so they have to buy, which means puts pressure on the upside. And this is then confirmed, and we're right on the 200 bar moving average here with the sell signal. And we've got the selling coming into the market there. They tried to test, and they buy back the market again. They bring the market back up again with some of the buying, but the market isn't having it. There's not enough buyers around to participate, and then the market is slammed to the downside. And if you mark this trade up, you will see that prices continue to move lower and trade all the way down to the psychological level here of 250 points before the market finds any sort of support there. We then see the market put in a retracement. It's not a 76% retracement, it's barely 50%, 38. But look where the market stops again, right on the 200 bar moving average, and this time the market can't get through and eventually makes its way back down. And as we look over to the left, you want a profit target. You go from here to here, and you'll see the market stop bang on the 76% retracement before breaking it later on in the session. So the market stopping there, even though there's no signal. You will have seen from the market alert over the last few weeks that the 200 bar moving average combined with other tools in the software certainly allow to see where the market's going and predict where it's going. And Bitcoin, nothing to report here. The market is sideways, simple as that. And just a couple of news items. We've got, if I can find it, I did see them earlier, should have just saved them out. But basically we're talking about that was the one I was after. Yeah, gold soars above 1300. Nikkei JGB yields tumble as the rout goes global. And there was also, this is the other one I was after, bloodbath, stocks crater as perfect storm. This is a slight element of hyperbole here, because you can see the market is actually starting to move back to the upside in the overnight market, but certainly Apple is playing a fundamental part. I noticed it made the mainstream news last night, which I don't normally watch, but I was passing by and noticed it on the TV. Well, it's going to have its day, isn't it? They can't keep pumping out the same thing year after year. I mean, I can't remember the last time I upgraded a phone, so never mind an iPad. And this is, as the credit starts to tighten as well, the liquidity in the credit market starts to disappear, then it's going to get tough. There's no doubts about it. We've got record debt. I don't need to go into that because we've spoken to it many, many times. Here we've got the payroll news today as well. I haven't seen this. Any major upside outliers may be a classic case of good news is bad news, because should the report indicate more labour market overheating, see today's ADP market expectations for no more rate hikes may be dashed. So what we're saying here is that this is where it starts to backfire on the manipulation of all of these figures, because they've been increasing interest rates since December 2015. If the non-farm payroll figures are good today, it will mean that Powell may have to increase rates again, which is causing the problem with the credit liquidity and also the inverse yield curve as well. Interesting times. And with that, I will conclude. As ever, thanks for watching. See you in the next one.